This is exactly a video example of how to put this strategy together, and also how to take a trade, entry, SL, and every other thing that you need about this setup. Okay, so first off, let me just give you a sketch of what this strategy look like. So we said we are going to higher time frame, like 4 hours time frame, to identify the trend, right? So on 4 hours time frame, when you see something like this, you clearly see that the price is breaking structures towards the downside, right? So this is just our basic market structure, as we all know. All right, and we know as the price is breaking structures towards the downside, the price is also leaving liquidity behind. Okay, as the price is pushing towards the downside. So we have another liquidity zone here. So we simply want to see a situation whereby price decide to sweep a liquidity zone, right? So you might have another push this way towards this level, and you have price this way. So when you have a price this way, you still have a new liquidity zone right here. Okay, now all you have to do is simply wait for the price to take out any of this liquidity zone. So let's say that this price keep pushing up, and at this point the price get to this level. So if the price should do this, you already have seen that the price have taken out this zone. Okay, so we now have a sweep of liquidity, which is the second concept of this strategy. After you have seen the direction which you will discover through the market structure, the price breaking structure towards the downside. So we are selling, you needed the price to take out a particular high. Okay, that is as a sweep of liquidity, and this sweep of liquidity give us what we call the algo market structure. All right, now that we have this, another thing you need to pay close attention to is this particular push here. Okay, this is an impulsive move that actually broke or swept liquidity, right? So you want to see the price retrace 50% of that move. Okay, the price have to retrace 50% of the move before you start looking for your entry. So at this point, you want the price to at least push down to this level. From here, retrace back to 50%. Okay, so once the price retraces back to 50%, if the price should come back here, you are to sell. Okay, so the best of it is if the price can actually break structure again before coming back. That's the best. But all you have to focus on is the price making retracement 50% into discount section. So once the price push back into discount section, you already have your entry within this zone, and that zone is where you're going to be marking your order block, right? You're going to be looking for order block zone at this point. All right, so but if you don't see your order block, okay, there must be another block, you should know. Okay, there must be another block. Then what I wanted to say is fair value gap. You fair value gap, I told you guys, you mustn't see fair value gap in all the entries. Okay, but when you see it, is preferable, it's better. Okay, it's better when you see a fair value gap. Okay, so once you see something like this, you simply wait for the price to retrace back to this zone, and you're making your entry. As simple as that. Okay, so that's basically how you can make entry using this setup. Okay, so let's go to the charts. Let's go to 4 hours. We are starting from 4 hours to see if we can get a clear chart example of this thing I just explained. Okay, so let's see. Okay, look at this chart. Can you see from here? There's a turning point. The price started breaking structures towards the downside. You can see this break of structure right here. Then you have another break of structure right here. So as the price is doing this, remember the price is leaving liquidity at this top here. The price is also leaving liquidity here. It's also leaving liquidity here. Okay, that these are our liquidity zone. Okay, so if you look here, this price couldn't even get here, and it's still the same retracement. Okay, so after that, we are looking for another break of structure, which probably we can actually see happen here. Okay, can you see a break of structure right here? Hope you can see this. Sorry, I want to get this my line straight. So we have a break of structure right here. Can you see the price actually broke that structure, that level? Then after that, we have our high. Remember, don't forget that the price have already left liquidity above here before the break of structure. Then what happened next? The price started to come back here, and take away or take out this zone, this liquidity above here. Can you see this? So after this, after the price have taken liquidity, you want to see the price make a move. I say the price should push or correct this impulsive move, like I said. Okay, the price should go 50% of this impulsive move here. And what happened? The price also retraced back. Okay, 100%, more than 100%. Okay, from here you can see the price retrace more than this zone, which is very interesting. Like I said, once the price do this one is more like a1 setup, right? So you can see the price retraced 100% of the move, which is very interesting. Then you look for your order block zone. Okay, you look for your order block. Where is our order block? You look for the last bullish candle before the move. You can see here becomes our order block. Now the next question is, do we just make entry here? The answer is no. Remember what I told you. Once you have seen, this is our setup right now. So when the price is right here, all you have to do, let's say that this, after this retracement that happened and the price is pushing back again into our order block zone, all you have to do is simply go down to 15 minutes time frame and start looking for your entry. Okay, so we switch to 15 minutes time frame. We want to see chart patterns, we want to see double top, we want to see head and shoulders pattern, we want to see any other reversal pattern on a higher time frame. So this is our zone. Okay, and what happened, the price actually gave us this particular pattern here, which we can clearly see a good double top right here. Okay, so once you have seen a double top, you can now make your entry based on double top, or you simply want to be patient. Okay, you simply want to be patient, you can make your entry using an ascending channel. Okay, break of channel or break of trend line. These are the points now you start bringing in any simple entry setup. You can decide to use even moving average at this point. Okay, but I advise you just focus on charts. All right, but if I still want to share something with you, let me go into let me get an MA. So let's use moving average right here, which is normally moving average 50. So if I go here and I change this to moving average 50, it could be simple. Even if you use EMA, same, you still get the same result. Now at this point, now you can decide to say, okay, once the price break out of my moving average, I'm selling. So at this point, this is, if you are using moving average for this entry, this is the point you are going to be selling. Okay, once the price break below that moving average, you sell. Your stop loss should still be above here, and this is exactly what you want to see. So if you are using trend line break, this is the point the price break a trend line. If you are using break and retest of trend line, everything is here given to you. If you are using trend line break, you are still going to enter at the close of this or this particular candle. If you are using break and retest, you are still going to use this as your break and retest. Once the price break your trend line, retest it, you are selling. If you are using double top, this is exactly where you're going to be entering after the price have given you a bearish engulfing candle at the second leg of the double top. All right, so no matter the price action you want to use, you have everything you need. If you still want to use head and shoulders pattern, you still have something like head and shoulders pattern, like right here. So you can see here, you can take this as the head. Okay, let me delete this. This could be your first shoulder, reduce a little bit. First shoulder, this should be your second shoulder, and above here should be the head. So this is still a valid head and shoulders pattern right here. No matter whatever you want to use, you have it here. So one thing about this setup is, once you see the setup, once you identify the setup, okay, every other thing in this particular strategy becomes easy, because you can now apply any basic knowledge that you know. Now you have identified the setup, you have known the direction, you have known exactly where you are going to be looking for those patterns, those candlesticks, those anything at all you put in here is going to give you a maximum result. But I prefer you use chart patterns. Okay, you use chart patterns, or maybe sometimes you use trend lines. Okay, but if you see with example, everything works. You are using candlestick. This is a morning I think evening star right here. This is also an evening star. This is bearish engulfing. A lot of candlestick patterns. Okay, but this is a lower time frame. Just stick to chart patterns and maybe break of trend lines. If you like using indicators, you can use MA 50 moving average, okay, exponential or simple moving average. You are still going to get the same thing. Okay, you can actually use break and retest of a trend line, good and fine. Okay, so anything that you see that gives you a bearish signal, make your entry. The important thing is that you have seen the setup. The next thing is just to make your entry. This is how simple this setup is. Okay, so this another first example. I can actually give you another example in the next video.